Hello, everyone, and welcome back to the Jett Cloud Podcast. I hope everyone had a very safe and happy holiday. I also hope everyone took a moment to really reflect on their finances and today's current state of economy. I received an email from Jessica B. asking about the similarities of the stock market contract and the housing market contract. Jessica had some really good questions. In the last podcast episode, we discussed options trading, which included a particular contract that can be sold. Yes, the contract in the stock market is similar to the contract in the housing market, at least when it comes to the purpose of both of them. We discussed how in the stock market you can buy and sell an actual contract without really having to buy and sell actual stock shares. And the housing market also has a contract. And you can flip the actual contract itself without having to buy or sell a house. All you have to do is find a motivated seller and a serious cash buyer and bring them two together. At that time, you will effectively broker a deal. And it's actually easier than it sounds. I mean, at the end of the day, it's all about strategy. You hear on the radio all these commercials and you see these advertising flyers, especially pre COVID. All these guys were advertising the seminars to teach people how to flip houses. They're amazing. It's a lot like the stock market. It's all about crunching numbers. Once you crunch numbers in the stock market, well, you know what you have in your pocket. And it's more of a self investment thing in the stock market. Even if a few people partner up, it's still more self funded as opposed to a perk of the housing market. There's a lot of funding. You can Google private money lenders or you can Google hard money lenders and contact these people to see if you can get your deal funded. You just never know until you reach out. Then you have to go out and find properties. You have to find the right contractor to repair the property. Now that you found your property and you have an itemized sheet from your contractor telling you what it'll cost, well, you now either invest your own money that you've saved into this deal or contact a private or a hard money lender to fund the deal. And you can contact more than one lender to buy your property for you. Then flip your house to some amazing piece of work and then make your sale. In the stock market, you're going to scroll through pages and pages of options and deals, good deals and okay deals. And in the housing market, you're going to look through list after list of tax liens, the broker list, estate sales list, criminal attorneys list. And just like the stock market, if you're the contract owner, you can make money off of the contract. They are similar. So many of those seminars, that's what they were selling. That key piece of information that you need. They're selling you that contract, which is a very smart buy if that's what you're into. The contract consists of critical documents like a guarantee in the pay amount and like putting rules in place to the time it takes to finish the job. You want your job finished on time. You have to sign that contract and date it. Without a signature or without a date, it's no good. You have to sign it and date it. That's very important. just like in the stock market. In the stock market, you e-signed, here you can as well. In the stock market, you have four types of stocks, categories. This is what you have to look through to figure this out. One, blue chip stocks. Blue chip stock. These are organizations that have been around for decades. They're tried and true. They're planted, kind of unmovable. Two, speculative stocks. These are companies with no true logic. They just kind of speculate things and hope for the best. They kind of play their luck. Three, range bound stocks. These are stocks that don't really fluctuate up and down in price. They kind of just stay at a certain price range and that's their worth. And four, growth stocks. These are the companies that have popular items out here that people across the world want and things that we need. And the stocks are growing. And if they're not now, they have a big chance on growing. And these are the ones that I like. And the house market has four numbers as well. One, repair cost. These are your contracts. You get the analysis of these from your real estate agent. So, whatever's going to cost and now everything broke down, you get the analysis of it from your real estate agent. So, first you call your real estate agent to do your CMA. That's your comparative market analysis. She's going to compare everything and let you know what's what. Two, your AVR. That's your after repair value. And this varies, all dependent on location. Location. Three, your holding cost. That's your insurance, your taxes, your HOA fees, any utilities you have to pay. And four, your closing cost. So, if you can do a correct analysis, and if you're not a person that likes numbers and you don't like adding all that stuff up, most of these guys and these agents, they also sell analyzer software CD. And that thing is so smooth. You just enter all your information in and it does everything for you. You enter, your cost, your fees, your taxes, and it analyzes everything. It puts everything right in plain perspective for you. And pretty much it tells you how much money you stand to profit. So, if you do a correct analysis, meaning if all your numbers are right, and you add up everything from all four of your housing market numbers that we just discussed, and then you crunch your numbers, and those numbers make sense to you, you like how it sounds. It's a good deal. It sounds like a good deal, and you can almost see your profit already. Then make an offer on it. Or when you crunch your four numbers and it just don't sound right, or don't sound like it's worth it, or don't make the offer. Walk away. So with the housing market, the analysis deal is like the biggest part of the whole deal, because the amount you have to invest, the cost of the property, the cost of repairs, down to every tedious little thing like even moving dirt, and the price that you can list it to sell for, well, all that is what determines the amount of money you will profit. So you definitely want to have an itemized sheet to break everything down for you. In the stock market, you have the pages on your investment account portal. In the housing market, you have this detailed itemized sheet. Or, if you're lucky, you have that analyzer software CD. Get an analyzer form. It's going to be way better than your pencil and your paper to figure out how much you can afford to spend on a deal or how much you want to spend on a deal. So, with the housing market, you're basically also focusing on your return on investment. Like, you're focused on what you will profit. Investing in real estate, if you want to be an investor, it's a lot like the stock market in so many ways. You don't need a license. You do not need a license to be a real estate investor. You can find an agent and use your agent's license. And they'll normally charge you anywhere from 3% to 20%. I think I've seen it go as high as 20%. So so now you know what you have to spend and you know what you want and what you're expecting in return to profit. We discussed an analysis of the stock market, and I think my example was something like you can buy your contract and then turn right around and sell your contract and maybe for a $25 profit real quick. And that is, one of the lower end contracts, something just, really quick. The housing market, it's the same key. It's that contract you want to have. You want to keep that contract with you at all times. You can get that contract from any one of those agents, like the guys that advertise those seminars, or you can get it from a real estate attorney. I mean, as we all know, housing examples can go quite differently in comparison to price than the stock market. They're just different levels. For example, you can make a $140,000 offer on a house and you want to renovate and flip this property. If the offer goes through and you buy the property for $140,000, you pay $400 in fees. You pay $1,700 in taxes. You pay $16,700 in repairs. You can turn around and sell that house, and if you're able to sell it for about, let's say, $190,000, well, you just earned over $40,000, over $40,000. So your total cost return of investment, the return investment that you would have made if you had just made this deal would be about 19.20% of an investment return that you would have just made, or 19.22 or 0.23, and that is amazing. So you can either buy a house and sell the house by contacting the owner, crunch numbers, make a deal to pay or purchase your property, hire a contractor, flip your house, then make your sale. Or you can buy and sell your actual contract by first buying the actual contract itself, not the house, buying the actual contract. Now that you have this contract in your hand with your stipulations on it and with these rules on it that hold others responsible for their end of the deal, well, you go out, you find a motivated seller and a serious cash buyer, and you bring them together. You give them your contract and effectively broker the deal. That is called brokering the deal. And then you make your profit once the deal goes through. So this way, you're actually getting paid for making the connection. Just like options trading, you buy your contract, which is 100 shares of something, and then you sell your contract. You sell those 100 shares of whatever, and you make a quick profit off of the contract itself. So, your profit is actually coming from making the connection. Someone over here wants to sell 100 shares of stock, and someone over here wants to buy 100 shares of stock. You've met them both, you know both their intentions, and you make the connection between a buyer and a seller. And that's how you profit from making the connection. In the contract, it's a legal binder to make sure everything goes smoothly and to make sure everyone walks away happy. So, yes, the bottom line, when it comes to their purpose, I think they're very similar and they're both very doable. It's just up to you to make a decision on how you choose to invest. And it's also up to you to know how far you're willing to go. I mean, you know you, and you know how you act. You know if you're a procrastinator. You have to get the procrastination out your system. That's bottom line. You have to become totally focused. And when you become totally focused, you can pretty much make anything happen. Because when you're focused, you learn the basic steps of things. And once you learn the basic steps, then you can take that knowledge and apply it and follow the guidelines, follow your step by step plans, and see your things to completion. Meaning, when you're focused, you don't stop, you don't give up. It don't stop, ever. And feel free to reach out with questions or comments, guys. You can reach me at Jett Cloud Podcast at gmail.com. Stay tuned to the next podcast episode as we continue on our journey to financial freedom, discussing real money tips and real life strategies. If you're on YouTube, like, comment, and subscribe to my channel. And turn on post notifications so you'll get alerted every time I post, which is every Monday night. I'm also available on other podcast platforms, and the links are in my description. Until next time, guys, stay invested. Hello, everyone, and welcome back to the Jett Cloud Podcast. I hope